The real headline here seems to be the continuing melding of all of Elon Musk's business all around, at least for right now, is his main public vehicle, and that is Tesla, including news that it will invest $2 billion to buy preferred shares of his AI company, xAI. Bloomberg Tech co-host Ed Ludlow joining us right now to talk a little bit more about, I guess, the blurred lines when it comes to this Tesla business, and which, quite frankly, might be the appeal for a lot of investors.
Yeah, Tesla participated in the Series E, $2 billion of preferred stock. And actually, in the fine print of the shareholder deck, they even go further and explain the rationale that they have arranged a framework where Tesla can leverage xAI's work in models to accelerate what Tesla wants to do in the physical world. In other words, humanoid robotics and autonomous driving. Like in the deck, you're absolutely right, Romain. This could not be more clear. The bread and butter legacy business of selling EVs to consumers, even the high-flying energy storage business, is now kind of secondary to this focus of Tesla becoming a physical AI company. Reminder that actually when shareholders voted on the non-binding proposal for Tesla to invest in xAI in November, a lot of shareholders abstained because xAI is a startup that's burning through billions of dollars of cash each quarter. And so even the most bullish names on Tesla look at that and say, do you want Tesla, which is doing its own internal work on software and hardware and AI, to be carrying the bag on a loss-making business like xAI? But they've pulled the trigger nonetheless.
Yeah, burning through billions when it comes to xAI, but set to get another $2 billion from Tesla. You mentioned that, this is more about Tesla transitioning to a physical AI company, but let's talk a little bit about the core business as it stands right now, because you take a look at fourth quarter profits, Ed, and actually they weren't that bad.
Weren't that bad. There was growth in FSD subscriptions in the fourth quarter. Active subscriptions in FSD now 1.1 million. And what Tesla does, like loads of companies, is put the plus and minus columns together of factors. They're saying that going forward, profit is going to be boosted by software sales, which if you believe in that long-term Tesla thesis, you want to hear. I'm just looking at the Bloomberg, and honestly, it's so important to just go back and check the data. We know what happened in 2025 with the second consecutive slide in deliveries, shrinking deliveries growth, but this was the first drop in annual revenues. So while Tesla's been able to offset the drop in consumer EV deliveries, bringing revenues from other places, revenue overall did fall year on year in 2025. And people will look at that because you have to remember that for all these long-term AI-related goals, the board still requires Elon Musk as a mandatory target for his $1 trillion of potential compensation to deliver 20 million EVs to consumers over that period, meaning he has to average 500,000. But yeah, AI everything, and I got a lot more questions about Fab, SpaceX, everything else for the call.